What if I told you that while everyone's been sleeping on Vchain, a $1.7 trillion asset management giant just made a move that could trigger the first green crypto ETF in Europe? And what if this partnership isn't just another announcement, but the opening shot in a race that could reshape how institutional money flows into cryptocurrency forever? Keep watching, because what I'm about to show you has the potential to turn VT into one of the most undervalued plays in crypto right now. Alright, let's break this down step by step, because this story has layers that most people are completely missing. Franklin Templeton, and I want you to understand the scale we're talking about here, manages over $1.7 trillion in assets. That's trillion with a T. To put that in perspective, that's more than the entire market cap of Bitcoin and Ethereum combined at their all-time highs. And they just announced they're bringing their BENJI platform to Vchain's blockchain. Now, before you think this is just another partnership announcement that gets forgotten in a week, let me explain what BENJI actually is. This isn't some experimental DeFi protocol. BENJI is a $780 million tokenized fund that's backed by U.S. government securities, cash, and repurchase agreements. Each BENJI token represents a share that's designed to maintain a $1 peg. But here's where it gets interesting. BENJI is already live on 7 major blockchains: Stellar, Ethereum, Arbitrum, Base, Avalanche, Polygon, and Aptos. So why is Vchain the 8th edition significant? Why now? The answer lies in timing, regulation, and a perfect storm that's been building in the background while everyone's been focused on meme coins and AI tokens. Here's what most crypto YouTubers aren't telling you about this partnership, and why it could be the catalyst that changes everything for Vchain. First, let's talk about the ETF race that's heating up right now. In 2024, we saw Bitcoin and Ethereum ETFs finally get approved in the United States. But the filings don't stop there. We've already seen applications for XRP ETFs, Solana ETFs, and Cardano ETFs from major players like Bitwise, VanEck, and Fidelity. But here's the question nobody's asking. What happens when this ETF race hits Europe? Europe has something the US doesn't, a laser focus on ESG compliance and sustainability mandates. The European Union's Sustainable Finance Disclosure Regulation is forcing fund managers to meet strict environmental and governance standards. And this is where Vchain's positioning becomes absolutely critical. You see, Vchain isn't just another blockchain. Since 2015, they've been laser-focused on real-world applications, supply chain management, carbon emission tracking, and ESG initiatives. While other projects were chasing DeFi yields and NFT hype, Vchain was building partnerships with enterprise clients and government agencies. But here's the kicker that changes everything. In April 2025, Vchain's VT and VHO tokens received MiCA approval. That's the Markets in Crypto Assets framework that provides unified regulatory approval across all 27 EU nations. Do you understand what this means? While other cryptocurrencies are still fighting regulatory battles, Vchain already has the green light to operate seamlessly across the entire European Union. Now combine this regulatory clarity with Franklin Templeton's infrastructure and track record. Their BENJI platform doesn't just tokenize assets, it delivers instant on-chain yield with full regulatory compliance. But what if this partnership is actually the testing ground for something much bigger? What if Franklin Templeton, with their $1.7 trillion in assets under management, and their proven ability to navigate regulatory frameworks, is positioning to launch Europe's first green crypto ETF? And what if Vchain, with its sustainability focus, MiCA compliance, and real-world utility, is the perfect vehicle for that ETF? Let me paint you a picture of what's really happening here, because this goes way deeper than just a simple partnership announcement. In July, President Trump signed the Genius Act, the Guiding and Establishing National Innovation for U.S. Stablecoins Act. This created the first true federal rulebook for payment stablecoins in the United States. It's a landmark move that clears the pathway for tokenized financial instruments to finally step into mainstream adoption. Across the Atlantic, MiCA is doing the exact same thing for Europe. These aren't just regulatory guidelines, they're laying down clear legal guardrails that give major institutions the confidence to issue tokenized ETFs, bonds, and other real-world assets directly on blockchain. Now here's where it gets really interesting. ESG mandates are adding another layer of urgency. Fund managers are being forced to meet strict sustainability and disclosure standards under the EU's SFDR regulations. And instead of locking competitors out, this evolving regulatory framework is actually widening the field. Franklin Templeton's due diligence on Vchain doesn't just validate the blockchain, it sends a signal that opens the door for other heavyweight asset managers like Bitwise, VanEck, and even BlackRock to take a serious look. Think about what Franklin Templeton brings to the table. They have the infrastructure, the regulatory relationships, and the capital to launch financial products that other firms can only dream about. Their BENJI platform proves they're not just experimenting with tokenization, they're actively deploying it with hundreds of millions in real assets. Now pair that with Vchain's unique positioning. While Bitcoin and Ethereum are fighting perception battles about energy consumption, Vchain has been building its reputation as the sustainability-focused blockchain. They're not just carbon neutral, they're actively helping enterprises track and verify their ESG commitments. But here's the part that could trigger explosive growth. If Franklin Templeton does launch a Vchain-based ETF in Europe, it won't just validate VET as an investment. It will create a regulated, institutional-grade vehicle for pension funds, insurance companies, and asset managers to get exposure to blockchain technology while meeting their ESG mandates. And once that door opens, the floodgates could follow. Let's talk numbers and market dynamics because this is where things get really interesting for VT holders. Currently, Vchain is trading at a fraction of its all-time high, despite having more real-world partnerships and regulatory clarity than most cryptocurrencies in the top 20. The market has been largely ignoring utility tokens in favor of meme coins and speculative plays. But institutional money doesn't chase memes. Institutional money follows regulation, utility, and risk-adjusted returns. If Franklin Templeton launches a Vchain ETF in Europe, we're not just talking about retail FOMO, we're talking about accessing a market of institutional investors who have been sitting on the sidelines waiting for compliant exposure to blockchain technology. European ESG-focused funds alone manage trillions in assets. Even a small allocation to a Vchain ETF could drive demand that dwarfs the current circulating supply dynamics. But here's what really matters for price action. ETF launches historically create sustained buying pressure. When institutions need to purchase underlying assets to back ETF shares, they don't day trade. They accumulate and hold. The BENJI integration is just the beginning. Franklin Templeton is essentially stress-testing Vchain's infrastructure with real institutional money. If that test goes well, and if regulatory frameworks continue developing as expected, we could be looking at the foundation for sustained institutional adoption. And remember, Vchain's tokenomics include both VT and VTHO, where VTHO is consumed for network transactions. Increased enterprise usage doesn't just drive VT demand, it creates ongoing VTHO burn that could fundamentally alter the supply dynamics. So what does all this mean if you're considering a position in VET? First, understand that this isn't financial advice, and cryptocurrency investments carry significant risk. But from a strategic perspective, Vchain appears to be positioning itself perfectly for the next phase of crypto adoption. While other projects are still fighting for regulatory clarity, Vchain already has MiCA approval. While others are trying to prove real-world utility, Vchain has enterprise partnerships spanning logistics, healthcare, and government applications. The Franklin Templeton partnership validates that institutional players see value in Vchain's approach. This isn't just about blockchain technology, it's about building compliant, scalable infrastructure for the tokenized economy. But timing matters in crypto. The regulatory framework is still developing, ESG mandates are still being implemented, and institutional adoption is still in early stages. Getting positioned before these trends fully materialize could be the difference between catching the wave and chasing it. The question you need to ask yourself is this: if Europe does launch its first green crypto ETF and if Vchain is the underlying asset, are you positioned to benefit from that institutional demand? Because once that train leaves the station, the entry point could look very different. Look, I've been covering cryptocurrency markets for years, and I've seen countless partnership announcements that amount to nothing. But the Franklin Templeton integration feels different. It's not just about the technology, it's about timing, regulation, and market positioning. Vchain has spent years building the infrastructure for real-world blockchain adoption. They've secured regulatory approval in major markets, and now they're partnering with a $1.7 trillion asset manager that's actively deploying tokenized financial products. The pieces are aligning for something significant. But here's what I want to know from you. Do you think institutional adoption will be the catalyst that finally drives Vchain to new highs? Or are there factors I'm missing that could derail this thesis? Drop your thoughts in the comments below. Are you bullish on VET after this Franklin Templeton news? What other utility tokens do you think could benefit from similar institutional partnerships? And if you found this analysis valuable, make sure to subscribe and hit that notification bell. The intersection of traditional finance and cryptocurrency is moving fast, and I'll be here to break down every major development that could impact your portfolio. Until next time, stay informed, stay strategic, and remember, in crypto, positioning ahead of the trend is everything. Before we wrap up, important disclaimer. This video is for educational and entertainment purposes only, and should not be considered financial advice. Cryptocurrency investments are highly volatile and carry significant risk of loss. I may or may not hold positions in the cryptocurrencies discussed. Always do your own research and consult with qualified financial professionals before making investment decisions. Past performance does not guarantee future results, and you should never invest more than you can afford to lose. The crypto market is highly speculative, and regulatory changes could significantly impact prices and accessibility.